Hi everyone and welcome to Investing in Canada. In this course, our objective is to help you make your investments in the most efficient way. So if you're new, welcome and let's start with the session. So in this session, we are covering different types of investment account. So in the previous videos, we have already talked about tax-free savings account, registered retirement savings plan, RESPs, tax-free first savings account, first home savings account, margin accounts. So we have already discussed these things in the previous videos. So if you haven't watched it yet, please go ahead and do it. In this video, we are going to talk about non-registered account. So please subscribe and activate the notifications for more videos like this. Our channel is EduFinWizard on YouTube. You can get access to the complete course on Udemy or Skillshare. The links are in the description. Okay, so what is a non-registered account? Also known as an investment account. So any account that is not registered as an RRSP, RESP or TFSA becomes an investment account. Okay, you can open a non-registered account with any of the big players like RBC, Scotia, CIBC, or with brokers like Questrade or Wealthsimple. Now, what can you add in a non-registered account? You can add stocks, you can add ETFs, you can add REITs. So whatever we discussed in an RRSP and TFSA, you can add those things in an investment account. The details of what is an ETF, what is a stock, what is a REIT, we'll be discussing in a future video. Now, a key feature of non-registered account, in tax-free savings account, we have discussed that the gains are not taxable, right? The income is not taxable. In RESP and RRSPs, everything is deferred, tax deferred. But in a non-registered account, all gains, all dividends, and all interest income that is received becomes taxable. So every gain you make, every dividend you receive, or every interest income you receive is taxable if it is getting received in a non-registered, that is an investment account. A key important point is if you have any losses, then you can adjust it against current or future gains in a non-registered account, which you cannot do in an RRSP, RESP or TFSA. So if you're making any gain, any loss, investment loss in a TFSA, that loss you cannot adjust. Same thing in an RRSP or an RESP. But if you're making a loss, an investment loss in an non-registered account, you can take that loss and adjust it against your other investment gains in the same year or in future. That's a key important point. Now, first type of thing you can receive in an investment account is capital gains. So what is capital gains? Capital gains is when you sell the stock, ETF, mutual fund or a REIT at a higher price than what it was bought for. Example, if you sell your RBC stock at $150, when the cost of acquisition when you acquired it was $100, then your capital gain becomes $50. So if you're making a profit on a stock by selling it at a higher price than what you have bought it at, that becomes your capital gain. Important point, only half of the capital gain is taxable. So if your tax rate is 30%, then $50 was your gain. Only half of that, that is $25 will be taxable at your tax rate 30%. So $7.5 will be the taxes that you pay on a $50 gain if your tax rate is 30%. So key point, only half of capital gains that you receive or you have made is taxable. Rest of it is capital gain exemption. Okay, this is how capital gains are taxed when you receive it in your investment account. Next type of thing that you can receive in an investment account is a dividend. So what are dividends? Dividends are share of profit that are shared by the company with an investor. So if a company is making profits, they might decide to share those profits with you as dividends. Okay, it's not compulsory to pay dividends for a company, but most companies, most profitable companies, right, share their profits with investors as dividends. Dividends are taxable, but most Canadian dividends get a dividend tax credit. So steps to calculate taxes on dividend I'm only covering the federal section. So there are two types of taxes that you pay: provincial taxes and federal taxes. So federal taxes we are discussing. Provincial tax depends on which province you are in. So except the tax rate, except the tax credit rate, the whole process is same. So we're going to discuss federal tax credits that you receive on dividends. So how do you calculate the taxes payable when you have received some dividend? So calculate the total dividend first. So estimate the total dividend you have received. So example, I have received $1,000 of dividend. That's step number 1. Step number 2, gross up the dividend by 1.38. So this $1,000 is multiplied by 1.38 to get 1380, right, as grossed up dividend. This is step number 2. Step number 3 is calculate taxes at your tax rate, that is your marginal tax rate. So let's say my tax rate is 30%. So 1380 into 30%, that is $414 is the tax based on my tax rate that I have calculated on this grossed up amount. Step number 4, calculate dividend tax credit at 15.02%. So calculate dividend tax credit at 15.02%. That is grossed up dividend, you multiply by 15.02, you get $207. So last step is tax payable, that is taxes on grossed up dividend 414 minus tax credit 207, that is $207 will be your taxes if you're getting dividend of $1,000, and this is the process to do it. Next type of income you can receive in your non-registered account is an interest income. Interest income is completely taxable and has no deductions or credits. So if you have received an interest payment of $1,000 from a bond and your tax rate is 30%, so straight away $1,000 into your tax rate, that is 30%, $300 will be your tax payable. No deductions and no credits when it is interest income. So that covers different types of gains and how they are treated in an investment account. So if you like videos like these, so please subscribe and activate the notifications. Our channel is EduFin Wizards on YouTube. You can get complete access to the course on Udemy and Skillshare. The links are in the description. Thank you and see you in the next video.